Brian Sazzi of Yahoo Finance here, and the fallout from the Silicon Valley Bank collapse is rippling across markets. What we know is this. On late Sunday, the Treasury Department, the FDIC, and the Federal Reserve came out with a joint statement designating Silicon Valley Bank and Signature Bank, a key player in the cryptocurrency banking market. They designated them as systemic risks to the financial system. What does that mean? It means that all depositors in those banks will in fact be made whole. Now, shareholders in those banks will be wiped out and senior management has been removed. So that we all know. Again, this is a very fast moving situation here. Not often you see bank runs and bank crises like this. Now, there are three themes I think you really need to be looking out for as this situation develops. First, what does it mean for the Federal Reserve's next move on interest rates? Prior to the fallout of Silicon Valley Bank, the Federal Reserve was right on the cusp of potentially raising interest rates by 50 basis points at its next meeting in just a few weeks. A lot of folks that I'm talking to on Wall Street think the Fed may not pull the trigger on a 50 basis point rate hike, likely 25 basis points, given we did have a hot jobs report just a couple of days ago. There has also been some chatter that perhaps the Fed takes a pause in raising rates as a result of the Silicon Valley Bank blow up, which in part was triggered by their efforts to raise rates to control inflation. So that's theme number one. Another theme here that could play out over time is, what does this mean and how does it shape future returns for the banks? A couple of folks that I have talked to, they're saying larger banks, it will be made more difficult for them to get capital relief in times of stress. Regulators could even support increasing capital regulations. What does that mean at the very highest level? It means potentially lower future returns for investors in bank stocks. Again, lots can change, but those are two themes to keep on the lookout for. And the third one, I'll just toss this one out there too, as you're sifting through a lot of this coverage, is what is the impact to pensions and endowments? Both of these institutional vehicles look to have invested in startups in recent years. A lot of these startups are now under pressure because of what is happening at Silicon Valley Bank, and as a result of what's happening as a result from the Federal Reserve's efforts to raise interest rates. So just some food for thought. I think those are three key themes that will play out as this situation unfolds. Again, lots of coverage on Yahoo Finance. Be sure to tune in. Brian Sazzi out.